Hey, what's up, stock compounders? Brad here. So it is that time again for our weekly Q&A session. I actually missed last week's, which some of you, I hope, noticed. I was doing a podcast, the Investing with Tom podcast, and we took some questions from our audiences in that one. But it's nothing like this, okay? I love having a dedicated chunk of time to answering all of your questions. So let's dive right into it. First one, of course, I asked this one, and one of you answered, so I'm actually going to use that answer, which is awesome. Other than investing, what relevance does compounding have in life? And my good friend, After Dinner Investor, compounding is relevant to business relationships. Trust in business relationships compounds into competitive advantages. Munger says, seamless web of deserved trust. I really like that answer. Of course, not just business relationships, all relationships. I think compounding can really have an impact, can really show up in that place that we all have in life, relationships. Next one, have you looked into Naspers or Prosus? It seems like the company Naspers is unable to unlock shareholder value. So I've looked a bit into Naspers, not nearly as much. Prosus, obviously, they're related to each other, but I want to learn more. Okay, so if any of you have seen great articles, listened to podcasts, whatever it is about Naspers and Prosus, send those to me. Let me know in the comments below. But it does. I mean, if you look at the delta between the net asset value for Naspers over time and the share price for Naspers stock, they're diverging, okay? So, but, part of me thinks the brilliance, right, of the management team at Naspers for buying Tencent back in 2001 and for the most part holding it for 2 decades with no plans to sell. Part of me thinks they're going to be able to crack this nut somehow. Okay, they're going to be able to figure out creative ways to narrow that gap between NAV and price. But it does remain to be seen. Okay, we have to see how that unfolds. Asking again, what is one thing you believe to be false that gurus you follow believe to be true? 0 to 1, yes, Peter Thiel. Okay, fantastic business book for any of you who have not read that one. For this one, I would say, one of the core tenets of value investing is to stay within your circle of competence, right? You've got to understand the business. The more I, learn about investing, the more investing I do, the more I'm coming to appreciate some of the other facets of investing, the psychological aspects, market psychology, shameless cloning. And personally, I kind of believe it's possible to do very well as an investor, even if you do not understand the businesses that you are invested in, okay? And that's like, good luck telling the value investor faithful that. So that's something I believe to be false. I don't think you really need to understand the business, but you have to have a framework in mind that lets you, borrow conviction in a sense, okay? And, think about all of the things that might imply. But you've got to have a system where you're not going to let your emotions drive the decisions that you're making, okay? So there it is. Your first YouTube videos were about real estate investing. Indeed, they were. What made you make the switch to stocks? Could you tell us some of your story there? Yeah, I'll give a quick summary of that. So I started out in real estate. I took a course through Robert Kiyosaki, Rich Dad, Poor Dad. Spent way too much money for that program. And I spent about a year trying to do wholesaling, all right, trying to find deals on the ground. I sent thousands of postcards to, the owners of these dilapidated properties in the San Francisco Bay Area. eventually, maybe 7 or 8 months in, I did my first deal. Okay, it was a $10,000 deal, wholesale deal. And what I realized, it took me a lot longer than it probably should have to realize this. Real estate is so much about schmoozing and about building relationships, about networking. Okay, I think it's really important to be an extrovert if you're getting into real estate, at least the real estate that I was doing. That would have been a hugely beneficial skill, or at least attribute, to be an extrovert, to really enjoy mingling with people. And that is not how I'm wired, guys. I am an engineer. I want to be in front of my computer. I want to be doing research. The schmoozing thing really isn't me. So that's what made it fairly obvious to switch to stocks. Okay, once I really stepped back and thought, all right, this real estate thing isn't really working. Like these other great investors, they kind of seem similar to me, right? They're introverts. They're kind of heady. They want to dig into the weeds on the research. And so, of course, I came across Monish Pabrai, who is also trained as an engineer. Lots of engineers, I think, at least that I'm finding in the investment community. And so it was kind of an easy, natural fit to dive into the stock market. So that's how that happened. What do you have for against cloning Seth Klarman into Intel? Intel's valuation looks good, and Intel's competition with AMD looks to be getting better in the next few years. Intel announced that it is going to use TSMC until its own process gets caught up. I think this will help to close the gap with AMD significantly in the next 3 to 5 years. So I don't have anything in particular against Intel or against Seth Klarman. Yeah, for whatever reason, Intel just didn't really intrigue me. I read a little bit about it in Value Investors Club posts, and it seemed like it was kind of falling behind in terms of innovation. But I could be, maybe that's changed. Maybe that was never true. But again, it's really just not a company that I wanted to dig deeper into. Nothing against Intel or against Seth Klarman. I think I noticed that Klarman had been in and out of Intel previously to owning it recently. And, that's really not what I want. I don't want a company that I have to jump in and out of, something that's highly cyclical. I don't want to play that game, okay? I want to own a great business that I can own for decades, and I don't want to have to think about it or play, the jumping around in and out of the stock game. So that was part of it. Brad, with Father's Day having just passed, I wanted to pose a related question on time management. In juggling my day job, running a household, and being a hands-on dad, I often struggle to carve out dedicated time for my investing practice. You've mentioned you have 2 small kids, so as a fellow busy dude, I'd be curious to hear how you structure your day to ensure time is put aside for your own investing practice. Is it simply a case of finding 15 minutes here and there, or do you have a more set schedule? So I do not have a set schedule, okay? I do have 2 small kids, 2.5 years old and like 8 months old. And I feel like I am not in control of my life. All right, that's just the reality of being a dad who likes to spend a lot of time with his kids. So it really is a case of, carving out little spots here and there. I don't have any magic tips on that one. If investing is really important to you, if it's something that gets you excited, you're really curious about it, you're going to carve out time. But obviously there's only so much time in the day, and with kids, there's only a certain number of things we can do each day, particularly in that situation. So if it's not something you're excited about, probably dollar cost average into an index fund and just say, all right, we're done with that. But if you're excited about it, you'll find pockets here and there to squeeze it in. What are the benefits of holding versus selling and buying back in at a lower price, assuming the price goes lower at some point? This is the question people ask me the most. So the kinds of businesses, like I said in the previous question, that I'm looking to own are the long-term compounders, all right? I want the business, right, the management team behind that business to grow my money for me, all right? And that's not going to happen if I'm jumping in, jumping out. That puts the allocation decisions on me, all right? That's too active. It's too much moving money around. I don't want to be the manager, right? I want to be the passive investor where I'm along for the ride with these great businesses. So, and of course, you pointed out here, maybe the price doesn't come back down. If it's a great business, I mean, look at great long-term compounders over time. Look at Constellation Software. Look at Microsoft. Look at Amazon. Look at Google. There's not a lot of price coming back down. There's not many opportunities to get in and out in a way that's profitable. So I guess that's my main argument for that. If you're going after these great long-term compounders, you can't really play the selling and buying back game. It just doesn't work for those kinds of companies. How does compounding help you with YouTube? Would you do anything different to grow your channel? Yeah, well, compounding, it is so heavily related to growing a YouTube channel. And how I think about that, when you're compounding, you're doing small things each day. That's kind of how I'm thinking about it, where you're not seeing any kind of exponential benefit for a while. And how that works with my YouTube channel, I committed to myself, I'm going to make a video every day. And I think I did that for like 6 months. All right. And of course, when you're getting started with a YouTube channel, it's linear. It doesn't feel like there's any kind of exponential, any kind of compounding magic there. All right. But there's a sort of a knowing, an awareness that, all right, if I make a video every day, I'm going to get a little bit better each day. Things are going to get sharper. I'm going to be more on point. Naturally, I'm going to figure out how to use tools in a more effective way to incorporate into my videos. There's a book. What is the book? Something Hardy. Okay, I can't remember the name of the book, but it's about exactly this. It's about doing these small things each day that a couple of years later you look back and it was a game changer, a total game changer. But it takes a while to actually see the impact. That's just how compounding works. So and if you look at growth, if you look at my metrics on YouTube, they definitely have a compounding kind of quality to them. Would I do anything different to grow my channel? I don't think so, honestly. I do the same thing, starting over today. Video every day, see what sticks, throw everything against the wall, see what sticks. Double down on what sticks, but continue throwing new stuff up against the wall. So many questions. That's great, Henry. I'm glad you're enthusiastic about this. Do you have any good free go-to sites for U.S. stock market info, including some basic stock screeners that show earnings growth? Well, I haven't really used this very much, but FinViz is a site that keeps getting tossed my way. It looks like it's free. In terms of stock screeners, the Magic Formula stock screener is free. What else? I use Value Line, which is not free, but it's very cheap because I got it through a public library. And then Ticker. Ticker is free right now, and it's fantastic for both U.S. stocks and international stocks. So highly recommend Ticker. Huge fan. Thanks for your content. Absolutely. If we are buying and holding the safest compounders, Constellation Software, Google, Berkshire, does it not make sense to use a bit of leverage? Ooh, tricky. Like 25 cents on every dollar of low rate, 2% interest. I think at that ratio, you need a very big drawdown to get margin called. Not Rick Guerin levered levels here. I like that reference to Rick Guerin. Thoughts? Thanks for your content. Here's my thinking on this, all right? Using leverage is a slippery slope, okay? Because once there's something in the human psychology where if we feel like we're getting something for nothing, what's to prevent us from going after a little bit more, okay? Say this works for a couple of years, right? Doing a little bit of leverage. I think it's really human nature to say, hey, it worked for 2 or 3 years. Why not use a little bit more, okay? And then a little bit more. It's a slippery slope. It changes the wiring, okay? So the question is, if you're not in a hurry to get rich, like Rick Guerin was, why do you want to use leverage? Yeah, I think that's all I need to say about that. Any good book recommendations on biases in investing? Confirmation bias and particularly survivorship bias, which is huge in 100 bagger stocks. Absolutely. There's actually some good recommendations here. This is the first one I thought of, is Poor Charlie's Almanac. One of the chapters is his talk that he gave at Harvard, which is the psychology of human misjudgments. 24 standard causes of human misjudgment. So Poor Charlie's Almanac is one I would most highly recommend. Influence by Cialdini is another fantastic book. I don't know if confirmation or survivorship bias are covered in that. Probably not, but it's sorry, I gotta have some water. Yeah, Poor Charlie's Almanac. I don't think I need to recommend anything other than that. I haven't read this Behavior Investing, but I'm intrigued by the name. What are your thoughts about dollar cost averaging for an index fund or ETF, since most of the stocks are being overvalued? Thank you and like your video. Awesome. So, yeah, I think you can't go wrong. Guys, if you don't want to spend much time investing, I think it is very smart to just do dollar cost averaging, maybe monthly contributions or however often you want into index funds. And then, of course, they're going to be frothy at some points, right? They're going to be depressed at some points. And the idea is all of that averages out over time, and you're going to get the market return over a long period of time. If you want to tweak it a little bit, you could, overweight or kind of add more into emerging market index funds, which tend to be a little bit cheaper today. But again, who knows if they're going to stay cheaper, what's going to happen over the next 10, 20 years. So you could, piece together a basket of index funds, which allow you to tweak, your approach for what you think is happening in the world, right? Whatever story you have for how the world is going to unfold over the next 10 or 20 years, you can build that in to a passive index fund approach. Yeah, so that's how I would answer that. What has been the best book about investing you ever read? Whew. Well, I don't know if it's the best, but it's one I'm going through again right now. It's The Most Important Thing by Howard Marks. And this book is phenomenal. It is literally like every paragraph just has so much wisdom, okay? I'm going to put a tweet thread together on Twitter with sort of my biggest takeaways from The Most Important Thing by Howard Marks. So check that out. But I don't know what the best one is, but that one is well up there. Thank you for your channel. Absolutely. After Dinner Investor. My question is, if you could ask Monish Pabrai one question, what would it be? Whew. I love that question. And just so you guys know, I will get this opportunity, okay? I'm going to win a lunch auction with him or something else. I will have a chance to ask Monish Pabrai some questions. One question. So the one question I would ask, just off the top of my head, is if you were starting over today, say you had $1 million, right? You had just sold part of your business. It's 1995. You have $1 million. Which investors would you clone today? Okay. Maybe it's, people he's met through Twitter. Probably be some smaller investors. I'm guessing it wouldn't be Buffett and some of the, Klarman, some of these managers managing billions of dollars. So that's what I would ask. Who of these smaller fund managers would you be cloning today if you had a much smaller sum of capital? So I am very eager to ask him that question. Have you taken a look at Redbubble? I looked at it a little bit, just what I read in Bonsai Partners' letter to shareholders. It seemed like it had gotten quite a bit more expensive when I looked at it versus when Rosenblum was initially buying Redbubble. So I haven't looked at it more recently, but I'm pretty sure Investing with Frank did a few videos on that. I think he might even own a stake in Redbubble. So that's who I would reach out to for that. What are your thoughts on Jack Duffley's magic formula strategy of buying every stock on the screener and selling them when they leave the screener each month? It sounds like a lot of work. So I actually just had a call with Jack Duffley tonight about the magic formula. So this is all very fresh in my mind. Yeah, I don't know. I'm curious to see how it goes. Okay? I don't really have any, expectations of whether it's going to overperform or underperform or what's going to happen. But I'm glad that he's testing a strategy that's related to the magic formula. I think the more people that take the magic formula and kind of test different iterations of it, and obviously the more data we're going to have, and we're going to, it's going to help us make better decisions in terms of what we do with the magic formula results or magic formula screener. So I'm excited that he's testing that. Assuming you're married, I am married. How involved is your wife in your investment process? She is not involved at all. Okay, she has no interest in investing, which is why I started this channel, which is why I need you guys to talk to about investing, because my wife doesn't want to hear about it. All right, so lucky you or maybe unlucky you. We'll see what happens, but it's great to have this outlet for all of my investment thoughts. How does companies with assets like Tencent for Naspers actually help Naspers shareholders? Is it good to invest in companies like Naspers where the only earnings they can get from their Tencent holdings is dividend, which in the case of Tencent is only 0.27% yield? So, I mean, you can either own Tencent outright, right, or you can effectively buy Tencent through a holding company like Naspers. I mean, if you really got to do the work, you got to do the valuation work. If you buy Tencent directly, what is the kind of price to value picture, right? What is the value of a share, and what is the price of a share? Same thing you can do for Naspers, right? What are you paying for that share of stock, and what do you get for it in value of the assets? So I don't really look at the only earnings they can get from the Tencent holdings as dividends. I mean, that's really true of any owner of Tencent. So that's how I answer that one. Really liking Ticker for the financial data going back over 20 years. Where is it lacking for your quant analysis, if at all, and what other sources are your go-tos? So the main thing Ticker is lacking for me is insider ownership. Okay, it does have an insider ownership tab when you're looking at a business level in the ticker terminal, but it's not going to tell you easily how much of the company insiders own. All right, you'd have to look through and know who the insiders were and add it up that way. So where I go to get insider ownership info is sec.gov, and I look at what is it? I'm forgetting the exact name of the filing. It's not the 10K. It's something it's the proxy to the 10K. All right, that's where I go to find the ownership of, board of directors and management as a whole. I think you were superb. Why don't you get more views? Thank you, Bruce. You got to tell your friends and your family, Bruce. That's why I'm not getting more views. You've got to spread the word. Thank you. I trust that you will do that. Since you were a shameless cloner, shouldn't you spend more of your time hunting for potential super investors to add to your list? Absolutely. I should be doing that right now. Okay? So because I'm doing a Q&A video, I'm going to ask you guys for a favor. Please tell me which super investors I should add to my cloning list. All right? Let me know in the comments. I am always looking to add great investors, hopefully on the smaller side, that still have a 15 to 20 year track record of outperformance compared to the market as a whole. How do you think BABA would perform in an American economic downturn or a global downturn? My sense is that it would perform similarly as Amazon or Costco would, which, as we've seen, what happened in the last year plus, it's been a boon to Amazon and Costco. So I presume it would have a similar impact on Alibaba, but don't quote me on that. How does your YouTube AdSense income compound so far? So it has not really been compounding so far, all right? I started with $70 the first month, I think $300 the second month, and it doubled fairly quickly to like $600, $700 per month. But then what happened? Google was showing too many ads. It was too aggressive, all right, and it was turning people off. Viewers were leaving my channel. I could sense that. I could tell. And so what I did is I went and I modified. So there's only one ad in each video between the start and the end. All right, so there's usually a video before the video, or an ad before the video starts, an ad when it ends, and I only have one in the middle. Now, because I made that tweak, my ad revenue went down by about half, okay? But what I'm doing is I'm prioritizing viewer experience while the channel's still relatively young, because I'm in growth mode, right? I don't want to do anything that inhibits the growth of my channel. So, I'm sacrificing ad revenue in order to do that, but I think it's the right decision. So it has not been compounding, sort of a temporary adjustment that's set me back a little bit, but I think it will help me compound even more in the future. SRG, currently a NAV story, absolutely. Buying 50 cents for $1. With that understanding, if the price gets anywhere near NAV, would you sell? Considering there is growth aspect to SRG as well. If management could increase NAV substantially in the future by developing some of the upper tier properties. So in short, what's your approach to selling SRG? Well, I'm pretty inclined to hold SRG until these premier development sites have been developed, okay? And that could take 5 years. It might take longer than 5 years. But I'm not in a hurry with SRG. And I think I'll know when to sell when I feel like the value has really been squeezed out of these top tier locations. All right. That's fairly straightforward. Great question. Naspers, I think this is Naspers has the chance to convert into Prosus after July 2nd. I do not know the procedure. I have not dug deeply into this whole conversion between Naspers and Prosus. Last one. Someone is using your picture and they've created a channel pinned by Stock Compounder, Brad Kellner. Okay, I've seen this. This is very annoying. They're replying to comments on my channel, which makes it look like I'm responding. They are giving out a WhatsApp number and then asking for $1,000 to start Bitcoin investing. So guys, if you see this, and this happens, it seems like it happens every couple of weeks on my channel. There's a new kind of impersonator that pops up. Please, I think there's 3 buttons. If you look here, if I hover, there's 3 dots here. Click that. Click this report button, okay? That will alert YouTube that this is a potentially spammy or fraudulent account that's commenting. What I do is I go into the channel, right? The channel that's impersonating me, and I block them. So they can't come onto my channel anymore and leave comments. And then I also remove the comment. But it's a lot of work. You can see with some of these bigger channels like New Money, I was just looking at, same thing. It's happening with them. I'm sure you've seen it on Graham Stephan's channel, Andre Jick's channel, Meet Kevin, all of those channels. So it's really helpful for all of us creators, if you guys see this stuff, if you report it as spam. Really helps us kind of stay on top of that. Real nuisance. I hope YouTube figures out how to, attack this before it becomes a problem, with some, I don't know, whatever YouTube does behind the scenes with the algorithm. Hopefully they can do something about that activity. But thank you for pointing that out. So that is all the questions we have this week. Thank you all for taking the time to submit questions every week. I'm going to try not to miss one again because I really enjoy this. It really lets me know what's on your guys' mind so I can tailor my content to be more relevant to all of you. So with that, I will see you all in the next video. Take care.